Good afternoon. I hope you all have a pleasant and enjoyable weekend. Um, Thank you very much for attending. Thank you very much for joining us today, and thank you to fxstreet.com to giving me the opportunity to speak. My name is Telmo Pinto. I'm the founder and director of market operations at Intuition Trading Group. For those who aren't familiar, we are a team of professional traders dedicated to provide simple, real-time, unified trading solutions for investors. For those who are unfamiliar with our series of webinars, you can see previously recorded webinars at fxstreet.com website. In order to start, it's good to read here the disclaimer, okay? It's important to know that any comments I made on the webinar, they are not a solicitation to invest, okay? Should consider carefully your financial situation prior to investing and seek advice from an independent financial advisor if you have any questions or concerns. So we finished last week, we finished last week webinar with a review of the extreme trend situation we saw on the pairs. Let me open here the platform. We saw a strong trend on USD pairs. Let me open here the Euro USD is here. On the left, as you know, is the 21 pips chart. On the right, the 34. We had this strong up move since the NFP, non-farm payrolls report. We had this area, then decide to break, then euro, possible cap here at 131.67. I told last Friday, that I prefer see at least a break of this level here, 130. It's preferable to see a break of the 130.80 in order to entry short or decide to make counter trend, because we see that this is a clear uptrend move. In order for me to enter short on Euro SD, I prefer to see a break of this level, and you can see here that market test this level, didn't close the bar, but test this level here, that's the 130.80, and then goes up. I was expecting a retrace to this level, a pause at this level, create some kind of support, but market went there and go through up, so I didn't enter this trade. I'm only long on the Japanese yen. I will show you later, as I told on Friday. So now we can have here, you can see on the 34 pips chart, like we can see a retest of the hikes of the previous swing, 131.67 area, that can make now during the webinar, and then if continue to break, I will assume this is the last momentum of this swing up, because market definitely need a retracement. We were expecting this retracement, at least since I am expecting, the retracement since this area here. I expect, as I told, I entered short. I have entered short here. Then market reverse. I reversed my position, and then I collect my profits. But I closed Thursday my trade. I didn't trail these because this is extreme situations, and market is on extreme situations about 1-2% of the time. And this is for me, at least for my system and for my trading, this is the worst scenario I can see on a pair, on an asset to trade, because this can go further higher, okay, but the space is not so clear now. We have the 132 level, 132 and a half. We are going to see that more clearly on the order book. But to go there, the risk reward is not compensating now. Okay, it's not good risk reward ratio for us to go long now, because we will have at least an 80 pips, 100 pips stop. So in order to have a good trade, we need at least to have 80 pips, 100 pips, or preferable 150 pips, okay, in order for our trade be a good risk-reward ratio. So I prefer step aside. I know that market is testing the high levels here. I can see clearly on the 34 pips. So we are going now, see the order book, in order to see where are the levels. Let me put here. Okay. Here, let me do a refresh. With this up bar here, the break on the US Open. Let me put this on net, zoom. So clearly we have the stops. First of all, the majority of the traders at these levels are now at the long side. That put me also more, okay, the higher probability is, in my opinion, for market go down or do a retracement, because the majority of traders are long here, as you can see here on the right chart. Sorry, open positions. So we always need to think that who will lose more money in the market now are the long side. So if they are the long side, it's preferable we check, okay, or we define an entry level for our shorts. We can see that we have a 131.80 above the last pivot, okay, are the stops here, this first level here, and then at 132.50 level. But in my opinion, I don't believe this go through this level, because these longs here will win a lot, and the pressure on the sell side will be less. So I'm thinking that market can go, okay, clean these stops here above the previous high, and then can go to 131 or can go here to 130.80 to clean these stops. And these stops below the price are the majority of the stops of these longs here, okay, on the open positions. So if market go there, they clean, okay, they clean the order book, and then we can think in further down move, okay, or a retracement and then go up again. But anything can happen on the market, okay. They can go to 131.80 and then 132.50 on extreme situations, on extreme trends like we are seeing now. Is not very good, okay, or a better saying, we don't have the best tools, or no one have the best tools to know where this can stop. The best option for us is, or we define a good entry levels and we have a good risk-reward ratio, or is preferable we set aside. Because setting aside on the trade is earning money, because we are not on the market, and on extreme situations like this, the probabilities are not clear, and we know that trading is a probability business, okay? It's only a question of probability. We have to put that on our side. Let's go here to platform to confirm the levels, and you can see here market tests on the 21, go and test the previous high. On this, if market goes down from this level, and test the 138 and break the 138, I'm short definitely. Okay, I will short below this level, expecting at least a test of this level here. On this level here, and as you can see, the risk-reward ratio on the trade is very good. On the 34, if we have this level here, we have the confirmation of this level, okay, the 130.60, and if break this level, confirms even further my trade that can go and test this level here, this close of the bar here, this small pause of the price, okay, this small congestion area, and you can see better on the 21 pips, but on the 34 is this up bar, down bar, then up and break. On this we have two down, make a higher low here, and then break again. So on euro, this is my perspective now. Sorry, this is my perspective now, and the levels I will want to show that market hits in order to put me short on the market. To go long, if market comes to this area here, and these levels 130.80 support the market, create some support here, I can think and go long with a small risk here. But at these levels, at the present level, I will not go in long for sure. At here 130.80, the stop is about 20 pips, 30 pips. Okay, I can lose that in order to earn 80 pips or 100 pips. But entering on a trade to lose 100 pips and don't know the targets, because there are no targets definitely. We know that the round numbers are important. 132. We saw that on the book we have the 132.50. But the market, the majority of the traders are long, so that can create a pressure on the market to clean the longs in order to get more, to gain more momentum, if then decide to go to the 132 or 132.50. So this is my analysis on the euro. Let's go here, okay, to the, sorry, this is the time frame. I don't want this, want this, okay. On the British pound, well, nothing more to say that continue to climb and go up. I alert to this level at those times. Market go test again. Here, we can see here, these two levels are a retest of the previous resistance. Break, go test again, and then decide. Probably they will go to the 163. That, as we seen last week, are the stops. Let me put here the order book. Can go here, British pound. As you can see now, let me refresh, and as you all can see now, the stops remain at those levels, and the sellers continues on the market. This means, and I'm alerting this since last week, these sellers will only give up, okay, will only close the trades above 163. So they are expecting that even at these levels, the British pound can go down, okay? The pound can go down from these levels. They will only close the trades above 163. At 163, what we can have is the majority of the traders turning long, and then, and only at those levels, we see a retracement of the market. We need to think contrary of the majority of the traders. if they think that 163 the market can go okay straight up, because here, as you can see on the open orders, there are only stops. These are only stops. On the open positions, we don't have further information here of the positions above 163, or they are a minority and didn't show and don't show on the on this chart, on this order book. Okay, but we have the open orders, and we know that these sellers here will close the trades above 163. And if market goes to 163 and then retrace, I can think in short only at that scenario. Because to go long, the risk is not compensated, because we are risking, okay, about 80 pips. We are going to the chart now to see the levels, okay, to see better the levels. So we can expect a further move here and test the 163, clean those stops, okay, and then market reverse. If we go long here, now we know that at 163 they will close the trades, and we have, okay, a possible 20-30 pips move to the upside. But the risk now is huge, and I will only think in short if market breaks this last resistance, okay, because market can go to 163, go test this level, if go to 63 and test this level and create some kind of range here, I can think in the long. But in that scenario, I'm only risking, okay, 20 pips, okay, or 30, better saying 30 pips, in order to make at least the double of the pips, a retest of this. If don't hold this level, then market can go fast to test this area. We have this intermediate area, didn't close, but this was a retest, as you can see by these 2 weeks. Market test again, and then break. The same thing that happened at this resistance, that was resistance, and now we can think that will hold the market. Okay. The wicks on Renko are important in order we see a possible confirmation of a resistance becomes support, or a support becomes resistance. Okay. These weeks here, we see that market breaks this level here. Let me put, market breaks this level here. Okay. We put here. Breaks this level, go up, then test, then retest again on the close of this bar, then retest again that level, and then finally, okay, this is going up, possible testing the 163, and market go clean to 163. So this is the situation now on British pound. It's important to see the 163 is a key level to see here. If go up and then bounce down, then we have here the 161.80 in order to create some kind of support for possible up move. If break, okay, I expect to come to this level here, the 160.80 area. This is the British pound. Now let's see the Japanese yen. I alerted last week on Friday, and I took this trade like I told. Okay, I entered here at this level here. As I told many times, I look at least 2-3 bars on the reversal in order to enter my trade. In this case was 3 bars, was a confirmation of a break of this low here, because market could go to this level here, create some kind of resistance, and then go down again. I prefer a break, market break, If you can see this on this bar, you can see clearly a week here, a week of the Renko bar that tests this level again and then go up. Now, the situation is we have this level here, the 79, that was the last eye of the Japanese yen before this swing down. We know that the Bank of Japan are at this level. The Bank of Japan told that he took all the necessary means in order to protect the Japanese yen, okay, the yen. So we are more safe on this trade than on others, okay. That's why I took this trade, even with the extension or the extreme trend situations we saw on other pairs. I preferred took this trade even on Friday because I know I have some big background behind me. Is the Bank of Japan. For the targets for this, we have now the 79. If break the 79, we have a test of the 79.40 area here, a possible lower high. It's important to see the higher lows or lower highs. If break this area, I think that it can go and test the 80 area. At 80 area, we'll see how if market go there, of course, if Japanese yen go there. It's important. We have these three areas. Now is a 79. If can break the 79, we have the 79.40 or 50 area, and then they can go possible test because this level here. Let me put shapes ellipse. Let me put here. This is preferable. As we can show, this area is an area of congestion. We have here on the left of the ellipse, we have a lot of up bars, down bars, up bars, down bars, up bars, down bars. So this is an indecision level and a ranging area. So if market go to 74.40, 74.50 area, we can think, okay, they have gaining some momentum in order to test the 80. Although, if I see here at these levels a minor retracement, this is 40 pips, 50 pips, I'm not worried at all because I know that market can gaining more momentum in order to break this level and then can go to further to 80 level. Okay, so on the Japanese yen, this is my interpretation now. I alert for this possible move on Friday. The trade was in development already, okay, was here, entered here. 60 pips are now the profit and possible go long. The risk reward were about 60 pips, and as you can see now, our risk reward is now covered. I usually take 1/3 of the profits or half of the profits when I have my stop made. Okay, I was risking about 60-80 pips. Okay, so I have now 60 pips. It's about 2-3 bars of the rank, preferable 3 bars. When I have 3 bars, I decide to, okay, my cycles give me the alert to close at least 1/3 or half of the position, depending how the market is moving. If it's going fast, if it's going slow, okay, I prefer to collect some profits there and then let the trade go. It's important. What is important there is not close. Okay, I have made 60. Let's close the trade. No. Let the profits run and cut the losses quick. That is a golden rule in the trading. Regarding the Australian dollar, is the weakest pair. Okay, is the weakest USD pairs. We can see that 106 is a very tough area. You can see clearly here on the Renko that go down and test that level, then made a retracement. We have now this important level here, was the last pausing or ranging on the pair, then break and go and test the 106 and now retrace. If market continues here and creates some kind of support at this level, I can think and go long here with a stop to this level here. Okay, so risking about 60, 70 pips in order to make 60, 70 pips. So to my first profit, my first take profit. So it's about a 1-to-1 risk ratio trade, which is okay to take. So, but only if market creates some kind of support here at 106, at 105, sorry. The 105 is important to see, okay, market bouncing here, go up, go down, go up, creating some kind of support. Okay, I can go long, expecting the market will at least test one more time the 106. If market bounce from here and go to 106 and can break this, okay, so we can expect market made this and then come down again and break this. Okay, we can have here some problem and see a further down move on the OC. If market go up, can break the 106, is a very important level and can go to further levels, further up levels. This is my interpretation of the Australian dollar. Remaining here, the Swiss franc. Well, to be honest, no levels, clearly no levels we see that market can, okay, we have here the only mark levels we have are these pausing or ranging here. And then these levels here. To go down, to go short, the risk reward is not compensating it. At these levels, we have a huge stop loss in order, market can go and test, this level, but this is not clear. We have here clear space for market to go down. We don't have nothing here that says, market can bounce here or can create some kind of support of the market. We don't have, but the risk reward is too high in order. I took this trade. I prefer see if this is to go further down. I prefer see a retracement to this level, create some kind of resistance, and then go further down. If it is to go up, I prefer to see a break at this level. It's preferable to see a break of this level, and then I can think and go long. Okay, so the key level now is the 93.50 area. If go to 93.50, holds, and then we see, market is creating some kind of resistance, they can go further down and test here the lows, the lows of April, 19 April, April. If go up, we have on the other side, we have this level here. That was the prior range, and this level here, but this level was already incorporated in this range here. These levels will already incorporate it. If you break this range, I can think that market can go and this level here. Since it's time to close. Sorry, Derek. I'm going to close here my webinar. So 93.50 is the important level to show on the Swiss franc. So let me finish here. Just to quick finish here, just to tell you that you can go to our webpage at fxstreet.com. We have automated trading signal service to the MT4 platform. You can see all at service signals, intuition at fxstreet.com. If you can see our website too at intuitiontrading.com, or if you have any questions, you can contact us at trading desk at intuitiontrading.com. Thank you very much for attending. I hope to see you all tomorrow, and I hope the market gives us more clues in order to we see better levels for entry. Okay, but these are the levels that is important to see. Sometimes it's better we stay aside, we step aside from the market instead of entering, okay, and we don't have a good risk-reward ratio. So thank you very much for attending. See you all tomorrow. Bye.